Hey everybody, welcome back to the channel. Today we need to talk about the backbone of the entire tech market, which are the semiconductor stocks. The chip sector has been on an absolute chaos run lately, creating massive winners and brutal traps for regular investors and traders just like you and I. If you're a retail investor trying to navigate this industry right now, you can't afford to guess. In this video, I'm going to look under the hood of 6 of the most relevant players in the game. I'm talking about NVIDIA, AMD, Broadcom, Qualcomm, Intel, and Taiwan Semiconductors. We're going to go ahead and break down their exact technical setups so you know exactly where the smart money is moving. I'll share critical stock impacting recent news that's driving each one of these. And by the end of this video, it's not going to be just about the hype and news that you hear and see online, but you get a clear idea for where the industry is heading. And I promise that you're going to see exactly what the charts is telling us. But before we do, click that like and subscribe button for me, drop in a comment, and we'll open dialogue. Okay, let's go. Here I have the king of AI, NVIDIA. But remember, all the data that I share with you, right, this isn't financial advice, okay? I'm just going to be helpful by giving you a clear idea on what the technical analysis, the indicators are telling us about the stocks themselves, and that way you can make the best judgment for your portfolio and your investment. Now here I have the technical analysis for NVIDIA up on TradingView. So this is TradingView, and the first thing that I want you to take a look at is the blue line that's on your screen right here. That's the 25-day period exponential moving average. Now if you take a look at the red line that's right above it, it's kind of like a reddish pinkish line right there. That's the longer term 100-day moving average. Right now the price is sitting at around $195, trapped below both of those lines. You can see the red line is acting like a heavy ceiling, capping any quick recovery. If you take a look at the yellow line at the very top, that's the RSI. So you can tell on the top left, RSI indicator. It's resting at about 47 right now. This tells us that the stock is in a neutral holding pattern after its recent cooling off period. A couple things that you should know about NVIDIA, okay, is that reports recently surfaced that NVIDIA's next-gen Kyber NVL 144 rack scale AI systems are facing manufacturing issues and could face delays, which has put short-term pressure on the stock. That doesn't sound too good, especially because it's been consolidating under that $200 mark as of late. And then secondly, the ultimate test is going to arrive at the end of July when the big tech giants like Microsoft, Meta, Google, they're all going to report earnings. It's going to be a big earnings report towards the end of the month. If their AI infrastructure spending remains massive, it points to a wave of new orders directly for NVIDIA. So that's what we want to keep our eyes out on specifically. If you're looking to buy or sell the stock, my opinion is that the best entry point is to wait for the price to break and close cleanly above that 100-day moving average ceiling that's roughly around that $197, $200 mark. That way it'll confirm a bullish reversal for you before you get in on it. And of course, if you're already up on NVIDIA, you're thinking about getting out because they're not performing the way that you want them to. The best exit point, in my opinion, again, right, not financial advice, but my opinion is that you should monitor it, see if it fails to hold that 192 support level mark, and then cut your losses, or of course lock in the profits that you already have if you've got that. Let's move into AMD. So I've got AMD here on the Yahoo Finance chart, but I also ran a technical analysis on TradingView for AMD. Here we've got it. If you take a look, you'll see how the price has broken out above the blue 25-day moving average line and the red 100-day moving average line. Even better, notice how the blue line is curling up and tracking right above the red line. That's a classic bullish short-term momentum for you. The stock is currently trading at around $552. The RSI is up, hovering over 50-ish right now, showing that there's healthy buying pressure without being overbought just yet. The latest news on AMD for you is that AMD is directly capitalizing on NVIDIA's architecture delays with its MI300X AI accelerators rapidly gaining traction across data center hyperscalers. So that's good news for AMD. And also, Wall Street is showing serious love to AMD right now. Wells Fargo just boosted its price target on AMD to $615, maintaining a strong overweight rating ahead of upcoming product cycles. So they're loving AMD right now, and the technicals are telling us that it's looking like a good buy right now. I mean, if you're looking to buy or sell this stock, I mean, my opinion is that you should look to buy on a minor pullback where the price test the blue line support at around $540, $50-ish. If you're exiting and selling, right, consider and you would probably do so because you're up on huge profits already. Consider trimming positions or taking profits if the stock rallies hard towards the 580, 600 resistance zone. Now, we'll go ahead and move next into Broadcom, which they go by, their ticker is AVGO right here. And I've got them on TradingView. This is the technical indicator chart that I've got up. The one fascinating buy the dip candidate is going to be AVGO Broadcom. Okay, if you notice how the sharp green candle popping up right above the blue and red moving averages. Prior to this, the red line was pushing the stock down, but sudden breakout above $382 shows that buyers are really stepping in heavily right now. That's what you want to know. The RSI has pushed above 54.5, confirming that momentum is finally shifting back to the bulls right now, away from the bears. A couple things you should know about Broadcom is that they just officially announced an extension of their massive customized chip agreement with Apple all the way through 2031. That's a good long time, putting rest to fears that Apple would completely abandon Broadcom at this point. And in my opinion, that's certainly great news for Broadcom AVGO. Very bullish on them. And then also Broadcom and OpenAI also unveiled Jalapeno, right? That's a co-developed AI chip optimized entirely for large language model inference, which will begin scaling out by the end of this year. So keep an eye out on how those things are going to play out, how those things are going to impact Broadcom's stock price. I think going long on Broadcom, in my opinion, is a good idea. If you're looking to buy or sell Broadcom, okay, my opinion, again, okay, not financial advice, just my opinion, my thoughts on this, just how I feel about it. The entry point is highly favorable right here on the breakout, provided that the price stays above the red 100 moving average line at roughly about 374.75-ish. And my opinion is that if you're trying to get out because you're up on a lot of gains right now, you're not sure what's going on, best exit point, right, is really, I mean, just set a tight stop loss just below maybe about 370-ish. Exit if it breaks down to prevent getting caught in a broader sector sell-off. We've seen too many of those in the past just few weeks here. Next up, we've got Qualcomm, which goes by QCOM. Qualcomm, I've got their trading view up right here. I've got the RSI 14 here. They're up at about 59-ish, so bullish momentum moving up towards the 70-ish range. A lot of bulls, a lot of buyers coming in right now. Then we've got the moving average for the 25-day, and it's right below the price right now, as well as the 100-day moving average is above. The stock recently bounced off the lows and is trying to wedge itself between those two lines. And interestingly enough, if you take a look down here at the MACD line, the moving average convergence divergence, the blue line is the MACD line. It is up over the signal line right now, so bullish upward momentum, still looking good, although the green histogram right here is getting at a lighter color, which stronger momentum is in the darker green. So those are some things for you to keep an eye out on for Qualcomm if you're interested. What you need to know, what's important for you, is that Citibank recently placed Qualcomm on a 30-day downside catalyst, pointing out that major Chinese smartphone brands like Xiaomi are slashing shipment forecasts by up to 30%. But on the bright side, Qualcomm is aggressively diversifying into data center space and just inked a massive multi-generation agreement with Meta to provide data center CPUs for agentic AI workloads. That's good news for Qualcomm outside of the whole cellular phone chip space. If you're looking to get into a good entry point, the safest entry is to wait for a clean breakout above that red line ceiling at $191. That way you can confirm that the downtrend is dead. And then of course, if you're up on some gains with Qualcomm, since they've had a decent run lately, if you're holding and you're preparing to exit at a time where it's going to be maybe, I mean, in my opinion, where it's not going to be able to sustain the recent bounce and it falls below the $180 mark. That's just my opinion. That's what I think looking at this chart here. Moving forward, let's go into Intel. Okay, so we've got Intel here. They had a real good day at the beginning of the day with this gap up from roughly what $123-ish up to $127-ish, kind of below that point now. So they ended up losing practically most of what they had gained already. But Intel, I mean, they've got a pretty bright outlook. If you take a look at the RSI line on the top, they're roughly at about in the 40 range, more on the bearish end right now. But you have to remember that Intel has been one of the wildest turnaround stories of the year, up several 100% over the past 12 months. The price has recently dipped from its all-time high If you take a look at the blue line crossing below the red line, that indicates a short-term bearish crossover, and the RSI again, right? I mean, it's sitting pretty weak in the low 40s right now. It's taking a breather from a monster run. That's my opinion on it. And just an FYI, I mean, think about it. Wall Street sentiment is sky high, okay? HSBC just doubled its price target on Intel to a Wall Street high of $200. I mean, they're at 120-ish right now. They've got that target at $200, pointing out to massive server CPU growth as AI shifts from training over to inference. And then secondly, the turnaround optimism is also getting fueled by the White House as government stakes via the CHIPS Act and rumors of localizing chip manufacturing partnership with Apple has kept retail investors highly bullish. If you're trying to get in on Intel right now, if you're asking me, my opinion is to wait for a stabilization point pattern near this range, the $120 support level. And also, if you want, I mean, take a look to see if it reclaims that red line of the $127 mark that it was at today. That'd be a good entry point as well. But if you're sitting on massive profits already from a recent run and you're looking to sell and exit, I'd say think about protecting your gains. I mean, you can do that by either trimming or exit fully if the stock closes below $118. Again, that's to protect your gains if you're already up big. By the end of the day, that's going to be your judgment. I just want to share this data with you, what it's telling us on the charts. So that's it for Intel. Let's move into Taiwan Semiconductors right now. They're a real hot stock right now, in my opinion. They closed at $151 up after hours to $453.99, almost $454. Let's take a look into the trading view chart with the technical indicators right now. So we have the RSI at in the 50-ish range, so it's moving up, climbing up on momentum. Buyers are moving in, as you can tell if you take a look at the line. It's going from down here, moving upwards. That means the sellers moving away from here, and we're getting more buyers coming in right now. Then if we take a look at the 25-day moving average, that's the blue line. Okay, it's been pretty hot on this run here at the end of last month in June. Did take a dip down, but then it's making its momentum with the golden cross here over the long moving average as of late. So it's got pretty good momentum right now. You take a look at the 100-day moving average. That's the pinkish reddish line here. It's below the blue. It's below the blue recent moving average line. So it's got pretty good momentum. And then on top of that, if you take a look at the MACD, you've got the MACD line, which is the blue line. It's on top of the red signal line. That means upward trend momentum with the green histogram looking pretty good. If you're looking to get into Taiwan Semiconductors right now, let me tell you, okay, something to note. Taiwan Semiconductors market cap has swelled to roughly $2.2 trillion, making it the sixth most valuable company globally, putting it on fast track to the exclusive $3 trillion club. A major upcoming catalyst is scheduled for July 16th. What do you think that is? That's going to either make this sector drive up even higher or scare everybody off. That's going to be when Taiwan Semiconductor holds its highly anticipated earnings briefing. Okay, that's their earnings call. You have to remember Taiwan Semiconductors makes everybody's chips. Okay, they make NVIDIA's chips. They're big time, and Citibank recently just raised its price target, expecting the company to hike its full year guidance due to insatiable AI chip demand. So if you're looking to get into the stock, I mean, I would say that, hey, buy on any dips right now. Any of the dips that brings the price down towards that red 100-day moving average support level. And just be mindful that if you end up getting into it before the earnings call, be mindful of the buy the rumor, sell the news, because that can really tank the stock, especially if you're not looking to stick around with Taiwan Semiconductors for at least a good period of time. So tell me what you think about the stocks in the comment. Tell me what stocks you like. Tell me what you think the outlook is going to look like for this chip sector. And that's all I've got for you. There you have it. Now you have the complete layout of the chip sectors, all the largest stock companies in the chip sector right now. Keep these charts and moving averages on your radar as you make the trades, okay? I also know that I showed you these stuff on TradingView, but you can also use Yahoo Finance, Google Finance, other free charts out there. And then on top of that, hey, remember, TradingView is also free as well. They've got a couple of free features in there. You can't use so many different indicators, etc., but it's still real nice to use. Try it out if you'd like. I mean, I'm not trying to promote any of these these things here. I'm not getting paid for any of these things here. I just want to help you out, okay? If you found this breakdown helpful, make sure you give me a like and a subscribe. If you have any questions, drop it into the comments. Thanks for watching. I will see you next time.